Buy State Bank of India, target price 676 rupees, ICICI Securities. ICICI Securities has buy call on State Bank of India with a target price of 676 rupees. The current market price of State Bank of India is 544 rupees and 70 paise. Time period given by analyst is 1 year when State Bank of India price can reach defined target. State Bank of India by maintained credit growth gathers pace. Consistently improving asset quality 530 rupees State Bank of India, SBI, delivered greater than 12% core ROE aided by growth build-up, credit cost at. Credit growth gathered pace, up 5.5% QOQ, 9% YoY, led by sequential uptick in retail, corporate and overseas advances. Slippages, net of interquarter recoveries, were at a mere 23 billion rupees, 40 bps annualized run rate, supporting 40 bits per second QOQ decline in GNPAs to 4.5%. Accelerated provision towards one of the standard stressed accounts, 15 billion rupees, and markdown of security receipts, 14 billion rupees, led to higher provisioning of 70 billion rupees. Else, specific credit cost was contained at improved visibility on asset quality with new normal credit cost of 1.0% for FY23E, FY24E respectively. Greater than 10% credit growth, asset resolution and stable NIMs will drive ROE to greater than 16% by FY23E, FY24E and valuations to 1.5x SEP 23E book. We therefore maintain our buy rating on the stock and revise the target price to 676 rupees, earlier, 624 rupees. Abnormally low net, interquarter, slippage run rate of mere 40 bits per second. Slippages settled significantly below expectations at. GNPAs thereby settled lower at 4.5%, versus 4.9% QOQ, further supported by recoveries and upgrades of 23 billion rupees and write-offs at 42 billion rupees. As per the bank's regular disclosure format, slippages are reported net of interquarter recoveries for any period. Hence, 9M/FY22 cumulative slippages are net of recoveries in Q3 FY22 from H1 FY22 slippages. GNPAs improved across subsegments. Corporate GNPAs were down QOQ at 7%, from 7.6%, retail GNPAs at 0.89%, 0.96%, SME GNP is 7%, 8.1%, and Agri GNPAs 14.4%, 14.8%. GNPAs in home loans came off to 0.89%, from 0.97%, 1.4% in Q2, Q1 FY22, auto loans to 0.89%, versus 1.03%, 1.4%, and express credit is gradually normalizing to 0.72%, from 0.7%, 0.65%. Consistently improving trajectory of slippages as an outcome of strengthened underwriting and risk management system. Accelerated provisioning for a standard stressed asset and markdown of security receipts, SRs, SBI created accelerated provisioning toward one of the standard stressed accounts to the extent of 15 billion rupees. It has also marked down SRs by 14 billion rupees, thereby providing 87% on gross SRs of 86 billion rupees. This led to higher provisioning of 70 billion rupees. Else, specific credit cost was contained at specific provision coverage of 71.2%, versus 70% QOQ, COVID provisions at 24 bits per second, 61.8 billion rupees, standard assets provisions of 183 billion rupees, 71 bits per second, and other provisions of 55 billion rupees, approximately 21 bps of advances, suggest adequacy of provisioning. This will lower the burden on credit cost in coming quarters. We are building in slippages at 1.7%, 1.4%, 1.2% and credit cost at 1.1%, 1.0%, 1.0% for FY22E, FY23E, FY24E, respectively.